Archimedes said, "Give me a lever long enough and a fulcrum on which to place it, and I shall move the world." This quote has been used in a lot of different applications in a lot of different industries. Today, we're applying this very astute, timeless quote to premium finance life insurance and how to properly apply leverage and take advantage of the arbitrages that exist in a premium finance life insurance structure. Remember to like, comment, share, subscribe. In the description section, there's an opportunity to schedule a 15-minute phone call with me to discuss this, where the economy is headed, where the interest rates are, where the stock market is. Given the fact that you are a uber successful business owner, or you're on your path to becoming an uber successful business person, financial success, you've got to have this conversation. And if your financial advisor is not having this conversation with you, you got to question the why behind it. So let's talk about the 4 arbitrages that exist with respect to premium finance life insurance. Arbitrage number 1. Successful people, the wealthy, the entrepreneurs, the business owners, the heartbeat of America, can often earn more on their assets than the cost of borrowing money from a financial institution, i.e. a bank. There's lots of talk right now going on about the Fed funds rate and what's the Fed going to do and what's their interest rate strategy going to be. And really, all of that is to drive capitalism. And our entire country was built upon the concept that, well, one of the concepts that, we can borrow money for a relatively low cost. We can then turn around and deploy those dollars into capitalism and enterprise to then earn a higher rate of return. And that is an arbitrage. Well, that same arbitrage exists in this opportunity. Our clients, the ones that can qualify from a carrier level from a premium finance, those that have a net worth, a minimum of a $2.5 million net worth, they're making about $250,000 a year or more, they have some liquidity. This is an opportunity. You are good at making money. You don't need to divest those dollars. It's cheaper to borrow the money from a financial institution. Arbitrage number 2, when the money is borrowed from the bank and it gets deposited into the life insurance policy, we are overfunding those premium payments. We're overfunding the cost of insurance. And I did a video on that. You can watch that right here on the 10-minute lesson on life insurance and how that works. If you are one of those term only people, stop watching this video right now, delete it. Don't even bother, right? This is not for you if you feel like term insurance is the only way to go. By the way, I did a video on that too. Less than 2% of all term insurance ever written has paid a death claim. So you're basically paying nothing, paying money for something that's not 98% probability not gonna pay a death claim. Anyways, arbitrage number 2, the index crediting method. When we're overfunding these policies, the index crediting method, which can be tied to the S&P 500, NASDAQ 100, low volatility index, or some other type of index that the carrier has, with the 0% floor, and others have a 1% floor. But with those combined, it will outpace, historically it has outpaced, depending on the window that you're looking at, but over a 10, 15, 20-year window, it's going to outpace the cost of borrowing the money from the bank, including their spreads that they add on top of that fee. The naysayers to this will say, well, interest rates are too high, or what happens if interest rates spike? Well, they did. Interest rates spiked in 2022. We went from borrowing money below 3% to within inside of 12 months, we were borrowing money above 7%, about 7.5%. But in 2022 and 2023, even though the interest rate to borrow was 7.5%. With these crediting methods right here in a properly structured policy, we were seeing clients getting 15, 20, 25% growth on their cash value. Now, don't have to be a rocket science to figure it out. If it costs 7.5% to borrow the money and you're earning 25% on the money that you borrowed in the life insurance policy and what is growing, that's a 17 to 18% arbitrage. Tell me that this doesn't work. And as interest rates go down, right, the opportunity for this looks even more attractive. So that's arbitrage number 2. Arbitrage number 3, if you're borrowing the premiums from a bank to go into the life insurance policy, that means you do not have to divest or earn your premium dollars with income, which means if, let's just say the premium was $100,000 a year. You actually have to earn $150,000 to $200,000 a year, depending on the state that you live in, to pay the taxes, to net the $100,000 to go into the life insurance policy. But when we're borrowing $100,000, even if we're borrowing it at 5%, 5.5% right now, if we're borrowing $100,000, that's $100,000. You don't have to pay the tax. So you're saving 50, 70% of what you otherwise would have done just by not having to earn the income to borrow the premiums. Clients can save substantial dollars by borrowing the premiums and not having to pay the tax. Arbitrage number 4, always. The death benefit always will be in excess of the loan balance. And not only will the death benefit be in excess of the loan balance, but the death benefit will be income tax free to the beneficiaries listed in the structure and the design. And if properly structured, it can also avoid the estate tax liability, which is an additional arbitrage. But when you think about this, I mean, Archimedes had it right? So when you properly apply leverage in the premium finance world, just like Archimedes referred to, borrowing money from the institution, from the bank, is the lever. The policy itself is the fulcrum on which to amplify these financial outcomes. And our clients, wealthy individuals, use this strategy to borrow money at lower rates than the potential return on their investments, maximize their liquidity while still retaining life insurance coverage, and achieve financial efficiency by capitalizing on the 4 arbitrages that I just walked you through for premium finance life insurance, resulting in a massive financial victory, financial movement with minimal effort. I hope you found this to be helpful. This is the picture that I could find. Imagine that with your life insurance policy. Premium finance life insurance does work. Those people that tell you it does not work, maybe they've had a bad experience, maybe they didn't have a proper structure. Listen, it's not for everybody. There are considerations. I just did a video on that. Watch this video about the different considerations, the risks, the things you need to watch out for when it comes to premium finance life insurance. But like anything, there is opportunity to be had. Nothing is without risk. It's just a matter of which risk makes the most sense for you and your family and your business organization and what you're trying to accomplish. You need to consider this. This is something you need to talk about. Like, comment, share, subscribe. Let's have a conversation.